One of the nation's largest employers, Wesfarmers, has warned the economic honeymoon is over as surging mortgage repayments bite into household budgets. And as the RBA governor readies himself for another shot at Senate estimates in Canberra this morning, some leading economists have claimed the risk of recession is now increasing. Live to Canberra, Trudy McIntosh joins us. Trudy, more warnings of troubled times ahead. What's driving this?
Well, Pete, it's no surprise, but it's a combination of those higher interest rates and prolonged high inflation. Households, as a result, are paring back spending, and our big retailers are starting to notice. We saw that with Wesfarmers boss Rob Scott. They run Bunnings, Officeworks, Kmart, and they're noticing that people are just not spending the way that they used to. This was Rob Scott last night with our business editor.
We're seeing a normalisation of a very unusual and almost honeymoon period for retail, with low interest rates, a lot of government stimulus. Now we're seeing not only a normalisation of behaviour, but interest rates, cost of living pressures, mortgage rates, all of this making customers more value conscious.
It was a similar message from the head of Treasury yesterday, warning that Australians need to brace for a challenging transition ahead. The budget has forecast that growth for the next financial year is expected to drop back to just 1.5%. And if that is to materialise, it will be the weakest growth we've seen in Australia since 1991, when we were emerging from that recession. We'll get another read today on how the economy is going, the monthly inflation figures out just before lunchtime. And set your clock to it, the Reserve Bank governor will appear at Senate estimates just after 9 a.m. They're grilling on how many more interest rate rises we're expecting, what's to come as well when inflation has peaked, but how quickly is it going to come down, Pete?